So in the last lecture we were discussing, or we have discussed section 40, clause A, subclause 1. That was a technical section. For simplicity, you can remember that if there is any payment which is subject to TDS, then if TDS is not paid, or if TDS is paid, if TDS is not deducted, or if deducted but not deposited with the government till due date of furnishing return of income, then we have to apply the provisions of section 40, clause A, subclause 1. So let me again give you a brief introduction of that 40A1, just to make sure that you remember the concept. So disallowed section is going on. Disallowed means the section which disallows some expenses. So still the discussion is on 40 clause A. Within 40 clause A, in the last class I discussed 40 clause A, subclause 1. And it is very simple technically. Suppose this is my previous year, 2021. Then it simply says that the payments which are subject to TDS and where they are paid. If outside India, then whether resident, non-resident, doesn't matter. If in India, then that person should be either a foreign company or any non-resident person other than an Indian company. So this is a little bit technical that you have to read. So if you satisfy the conditions of 40A1, then if your payment is related to previous year 2021, if on that payment you are under an obligation to deduct tax at source, so you didn't deduct the tax. If you didn't deduct the tax, then you cannot debit that payment till in the previous year 2021. Or you deducted the tax, but you haven't deposited it till when? Now suppose if this is 31st March, this is 1st April 20. So my first issue is what? That I failed in deducting the tax. If I failed in deducting the tax, then I cannot debit that payment in previous year 2021. Or what I did, I deducted on time, but unfortunately, I failed in depositing it with the government on time. Now this is next year, starting from 1st April. So if suppose this is 31st July, then for this year 2021 return, I have, if I am an individual, I have the time till 31st July. So what I did, I deducted the TDS, I deducted, but I didn't deposited it till 31st July 21. Then also I cannot debit the payment in 2021. But I can debit the payments when I will actually deposit the tax. Suppose this year I forgot, next year also I forgot, next to next year suppose I will also forget. And if I remember to deduct or to deposit the tax in this year, suppose in this year I deposited that tax, I deposited the TDS which was related to the payment which was made in 2021. If I deposited that TDS in this year, then I can deduct the payment in the P&L account of which year? This is the P&L account of 23-24. That's it. It simply says that any payment which is subject to TDS, if made as per that condition, then you must deduct the tax and also deposited it on time. If you failed in deducting, or you deducted but you failed in depositing, then you cannot debit that entire payment in the year to which it belongs. But you can debit in that year in which you deposit the tax which is related to that previous payment. Is this clear? If yes, please raise your hands. That is the crux of basically 40A1. I discussed so many examples just to make sure that when you start repeating it or when you start learning it yourself, your concept of 40A1 will be clear. That was the main intention, to discuss so many numericals, so many assumptions. That's it. So this was 40A1. Now let me show you the act and let me show you that 40 clause A, within 40 clause A there is not only one subclause, there are so many subclauses which we will discuss. So let me share with you the website first. It is taking a little bit time because when we share the websites through these team etc, then the system becomes a little bit slow, so it is taking a little bit of time. This is section 40 clause A in case of any SSC. So I have covered in the last lecture only subclause 1, but now there are so many subclauses. You can see another subclause 1A, then this we have to do, then subclause 2 we have to do, all are not in our course. I will discuss only limited one. Subclause 3 we have to do. That's it. Discuss now basically 2 or 3 sub clauses of 40 clause A. So let us now come to the screen because I need to simplify these points for you. Until and unless you first read it yourself, you will find it very difficult. So let me simplify the point for you. And now 40 clause A. So this is my second point. 40 clause A subclause 1A. Within 40 clause A, I am discussing now 40 clause A subclause 1A. Earlier was 40A1. So please write the heading because you must learn this heading. Any sum payable by an assessee means by businessman assessee, payable by an assessee on which TDS provisions are applicable. Now technically that was same. If you see only this language, I can say that there is no difference in 40A1 and 40A1A. If you see the language, you will find that there is no difference. Here, there also I use the same language, but when you see the conditions which are written inside these clauses or sub clauses, then you will notice the difference. So what are the conditions for this section? First condition. First of all, it is applicable to all assesses. All assesses. Now this sum is payable to a resident. The sum payable is to a resident, specifically only to a resident. Sum payable is to a resident. This resident can be in India or outside India, does not matter. This resident can be in India or outside India, does not matter, but the sum payable should be to a resident. If you remember 40A1, the condition was sum payable should be outside India. Outside India, you can be resident or non-resident. Or if within India, then sum payable should be either to a foreign company or non-resident assessee, any non-resident assessee other than an Indian company. That was the payment condition in 40A1. But in 40A1, what is the payment condition? Payment should be to any resident. That resident can be in India or outside India. That's it. So this is the point. Third point. As per the provision, the assessee is required to deduct tax at source. As per the provisions, assessee is required to deduct tax at source. And last is also same. The assessee failed. The assessee has not deducted tax at source or deducted the tax at source but not deposited it with the government till due date of furnishing return of income. under section 139(1). That is also same. If you carefully notice, only this B condition is different. Let me show you 40A1 also. I don't know where I lost the previous slides. Those previous slides are not coming, but if you have noticed, if you have noted in the earlier lecture from those previous slides, you can see the difference yourself. I somewhere lost those slides. The only difference is between section 40A1 and 40A1A is in 40A1 payment should be as follow to these people, and now in 40A1A payment should be as follows. The remaining is same. Now since in this case payment is made to a resident, it is easy to trace a resident defaulter. It is easy. In this case, defaulter is not the recipient. Defaulter is basically the payer. But what I want to convey is that in section 40A1, my 100% payment was disallowed when I committed a default. As a payer of the money, if I paid the money without deducting tax at source, I was penalized with what? That 100% of the payment will not be allowed to be shown on the debit side. Now in this case, government says even if you have failed in deducting tax at source, or you deducted tax at source but you failed in depositing, still we will allow 70% of the expenditure in the same year. Only 30% will be disallowed, because in this case the main intention is that the sum is payable to a resident. What is the purpose of TDS? Basically the purpose of TDS is that the government gets regular revenue and some audit trail is formed. It is easy to trace a person who has received the money. When I deduct tax at source of some another person, then government can easily get an idea, or government will be having the information that at what PAN number some income was generated. So that if that person does not file the return of income, government can at least check why that return of income has not been filed. So government can take action in these cases. It is easy to trace those recipients who are residents. It is little bit difficult to trace those recipients who are non-residents, because normally resident is the person who has stayed or who is staying in India. Normally, of course, we check the condition 182 days, etc. But still, as a general sense, normally it is assumed that tracing a resident is much easier than a person who is a non-resident. So main intention of 40A1 and 40A1A is not the permanent disallowance. The main intention is not that permanently this expenditure will not be allowed. In the last section also 40A1, 100% was disallowed, but the moment I deposited the tax, 100% payment which was earlier disallowed was allowed to me in the same year in which I deposited the tax. So ultimately payment will be allowed. So when payment will be allowed, and when it is easy to trace the recipient who is a resident, Government of India says that if this is the default, if you have committed a default as per this provision 40A1A, still you can debit 70% of the expenditure. Only 30% of the expenditure will be disallowed, and that 30% will also be allowed in the same year in which you actually deposit the tax later on. So that is similar to section 40A1. So application of 40A1 and 1A is same. The only difference is in 40A1, if the expenditure was related to the previous year 2021, If I didn't deposit the tax, 100% of the payment was disallowed. 100% of payment was disallowed. Disallowed means I cannot show the expenditure on the debit side of P&L account. But the year in which I deposit it, the year in which in future I deposit the tax, deposit the TDS with the government, then same payment which was disallowed will be allowed in that year. 100% of the payment will be allowed. So if payment was related to previous year 2021, I didn't deposit the tax in 2021, I deposited the tax in previous year 2038-39 for example, then I can debit the expenditure in 2038-39, there is no problem. But now what is happening in 40A1A? If payment is related to previous year 2021, only 30% of payment is disallowed. Still, though I haven't deposited the tax on time, still 70% of payment will be allowed without any fault. So if I prepare the P&L account of the previous year 2021, if I am covered in 40A1, suppose 1 lakh is the payment which I have made without tax, still I can debit 70,000. How much I cannot debit? 30,000, and this remaining 30,000 will be allowed in future in which I deposit the tax. Will be allowed in the year in which TDS will be deposited. The only difference practically is in 40A1A, in 40A1 you add back 100% of the expenditure if you have debited. In 40A1A you do not add back 100% of the expenditure if debited, you only add back 30%. That's it. Please raise your hand if 40A1A is also clear. The same example which you attempted of 40A1, that same example you can attempt it for 40A1A. The only difference will be when in 40A1 I was showing nil deduction in the previous year 2021, now I will show 70,000 as reduction in 2021. That's it. But can you notice some problem here between 40A1 and 40A1A? Can you notice something which is not looking correct? If I show you the previous slide, can you sense some problem? Can you see something?
Sir, can I try?
Yeah.
Sir, if the expenses of previous years are all paid, like if they are allowed to be deducted in a single year, the loss will be too much, and the PGBP income will show loss.
Actually, I have not understood your point.
Sir, like if Mr. X has not like paid the tax for previous years for so many previous years, and all of a sudden in one single previous year he has made the tax payment to the government, so that expenses may be too huge, and the P&L account will show loss.
So what is the problem in this case? Because for the past so many years, he must have showed the higher profits. So now if he is showing the loss, there is no issue. It's genuine. What is the problem here? There is no such problem. If for the past 5 years I haven't deducted TDS, that means I have showed in the past 5 years higher profits, I have paid higher taxes. Now if I have paid the past 5 years TDS now, I can show the profit which is of course less, so I will pay less tax, or maybe I will not at all pay any tax because my income might be negative. So there is no problem. That is not the problem. Any other who can notice something, or any discrepancy you can notice in the act? Some overlapping, some discrepancy, anything which you can notice. Can't you sense something wrong here?
Sir, I think the difference between 30% and 100%.
No, that is the factual difference. That is not the problem. Problem in the act, or what issue is there? Might be something is wrong in the act. It doesn't mean that every act which is written is 100% correct. There can be problems. The problem is overlapping problem. In 40A1A, if payment is made to a resident in India or outside India, both are covered. So can't you see that if payment is made to a resident outside India, then this type of payment will be covered in both the sections? There is a payment which is covered in both the sections. Payment to a resident outside India is covered under both the sections. Both the sections. Payment to a resident outside India is covered under both the sections. Similarly, now in 40A1A, payment in India is also covered. Payment in India is also covered. Now in 40A1 also, payment this was not R, this was in India. Payment in India to a foreign company. That foreign company can be resident or non-resident. So I can say that one more payment is that which is covered under both the sections. Payment is made to a resident foreign company. You can say foreign company is resident. So here also resident, here also resident. Payment to a resident foreign company. Payment to a resident foreign company where? In India, and you can say in India. Both the cases in India. These are two payments which are overlapping in both the sections. Is it clear or not? This is what I wanted to ask you, that something is problematic in the language of the act. These two payments can be covered under both the sections. 40A1 also covers it, 40A1A also covers it. Is it clear or not? It is again a little bit technical, but if you carefully notice that screen, you can easily understand that yes, these two payments are covered in both the sections. Please raise your hand if the point is clear. Now, if these two payments are covered in both the sections, then what should you do? Can you tell me then what I should do now? What do you think I should do now? Anyone who can try to tell me what I should do now? And as an assessee, it is my choice that which option is beneficial for me. In such payments, as a rational person, I might go for, or I should go for dealing as per section 40A1A, where in spite of the default, I can still debit 70% of the expenditure in the same year to which it relates. Remaining 30% I will debit when I will actually deposit the tax. So this is what the problem is. So it is my advice to the government of India that they should bring some suitable amendment and they should try to remove this overlapping which is there in these two sub clauses of section 40 clause A. because these two payments are those which are covered under both these sections. So in that case, every assessee of these two situations will be interested in application through section 40 clause A subclause 1A and not through section 40 clause A subclause 1. Please raise your hand if this section is also clear. I'll be moving to the next subclause now. The previous example of 40A1 can be as it is applied in 40A1A with the only difference that whatever was 100% disallowed in the previous section, it will be 70% allowed, and whatever was allowed later on in the future years when I actually deposited the tax, here 30% will be allowed in the same year in which I deposit the tax. Otherwise, practically everything is same. Next point now. 40 A subclause 2 now. So subclause 1 is over, subclause 1A is over, subclause 2 now. A subclause 2. Any income tax paid on income taxable under the head PGBP. Suppose I am computing my PGBP income. This is my P&L account of 2021-22 assessment year, or you can say 2021 previous year. And suppose I have paid some advance tax as a businessman. I have paid some advance tax of 10 lakh rupees because I am assuming that my income will be around 1 crore rupees PGBP income. So I have paid 10 lakh advance tax. This 10 lakh I cannot show on the debit side because this tax is not a part of your business income. It is the income which you have earned from business and then you are paying tax to the government of India. So you cannot debit this income tax on the debit side of P&L account under section 40 clause A subclause 2. That's it. Next, section 40 clause A subclause 3. Last technical section of section 40 clause A. So please write it. Here also you will use the word any sum payable by an assessee which is taxable. Now this sum is taxable in the hands of the recipient under the head salaries. That means this section basically covers only the employers without TDS. This section basically covers only the employers. Any sum payable by an assessee which is taxable in the hands of the recipient under the head salary. So who will tax the income under that salary? Everyone who is an employee. So 40A3 only covers those employers who have failed in deducting tax at source, as well as who have failed in depositing the tax at source. Now, before proceeding further, main three interrelated TDS sections are 40A1, 40A1A, and 40A3. These are main interrelated and little bit confusing sections. Here, payment to only R is covered, resident. Payment can be any payment, any payment. Here payment to, so many categories are there. Payment to whom is covered. Here also payment can be any payment. But in 40A3, Payment to whom is covered? Only to an employee. Payment to an employee. And in fact, that payment to the employee, which will be taxable in the employee's hands under the salary, of course. So it cannot be any payment. I can say what payment you are making to the employee, it is basically related to salaries. So you are giving, as an employer, you are giving salary to your employee. And on this salary also there is a TDS, that is sure. Under section 192 there is a TDS on salary. There are so many TDS sections I have shown in the act, those sections, but salary is also subject to TDS. Like if my college gives me salary, it is the obligation of the college to deduct tax at source and then give me the salary. In 40A1, can you tell me what was when there is a default or when the penalty provisions indirectly applies? In 40A1, when there is a default, first, either you have not deducted or you deducted on time but not deposited. In 40A1 also the same conditions were there. Either you have not deducted the tax or you deducted the tax on time but you failed in depositing. Consequence was here 100% was disallowed. Here only 30% was disallowed. Here also 100% will be disallowed. There is no 30 or 70 etc. 100% will be disallowed. But in that case, it was either not deducted or not deposited, or now we use the word and. We use the word and now. So both the conditions must be satisfied. Neither deposited, neither deducted, nor deposited. Neither deducted nor deposited. If this is the situation, then you disallow 100% of this salary payment, otherwise you allow this. So again, write the conditions which will help you in learning this 40A3. Condition is any assessee payment, not any payment, payment of salaries. Payment of salaries to the employees. And third is payment is made to whom? Outside India. Payment is made to whom? Outside India. This employee can be resident or non-resident, or if in India, non-resident. Now, since the recipient will tax it under the salary, one thing is sure that all these are individuals, human beings. This is sure. These all will be individuals. Recipient cannot be partnership firm. Partnership firm doesn't include the income under the head salaries. So individuals will be there. All individuals are there. And last is the assessee has neither deducted tax nor deposited, both the conditions. Neither deducted the tax, neither deducted the tax, nor deposited, both the conditions. If I deducted but not deposited, still government says you debit the salary, because sooner or later you will deduct the tax. So both the conditions must be fulfilled, neither deducted nor deposited. If this is the case, 100% payment will be disallowed. Same like previous sections. 100% will be disallowed, but it will be allowed again in the same year in which you actually deposit the tax. So let us solve this case. So I think it's better that I share with you illustration from my book for this case. Let me share this book. Is the screen visible?
Yes, sir.
I'm discussing 40A3. If you remember carefully, both the conditions must be fulfilled, neither deducted nor deposited. Now see, this is the question. Illustration. During the previous year 2021, 8 lakh as salary has been paid oblique payable by X to his employee Y. So I am learning it from the businessman point of view. So I'm not concerned about Y. I'm concerned about X because X is a businessman. X will prepare penal account. Under section 192, it is necessary for the employer to deduct tax at source on salary payments to its employees. However, he has neither deducted such tax nor deposited such tax. Compute the amount of deduction allowed to X under section 40A3 while computing his income under the head PGBP for the assessment year 21-22 under the following different situations. Now I have made different assumptions and then you will see what answer will come. This is my situation number 1A, where the salary is paid outside India. To whom it is paid or payable? P, a resident individual. Now, whenever salary is paid outside India, then it does not matter who the recipient is. Recipient can be resident or non-resident, doesn't matter. Whether tax is deducted? No. Whether tax is deposited? No. Is section 40A3 applicable? Of course, yes. And if yes, how much will be disallowed? 100%. So how much will the deduction which is allowed? Nil. If I say disallowed, that means deduction is 0. So deduction is 0, nil. This is what my one situation, first situation. Second situation. What happens now? Payment outside India. Now the recipient is again P, a resident individual. Now whether tax has been deducted? Yes. But it has been deposited? No. To make this section applicable, you must commit both the things, neither deposit nor deducted. I deducted but I haven't deposited. Still government says there is no issue. You please claim the deduction. So is this section applicable? No. So that means 8 lakh will be allowed. Outside India, resident, same thing. Whether tax has been deducted? No. But it has been deposited? Yes. Because maybe I forgot to deduct. But just when I came to know about TDS, I deposited as an employer, I deposited it from my own pocket. Because sooner or in the next month's salary, I will recover that amount from the employee. If I'm saying that I have deposited from my own pocket, it doesn't mean that I will not ask it. I will not recover this amount from the employee. I deposited to the government. I deposited with the government from my own pocket on behalf of the employee. So whether tax has been deposited? Yes. Is this section applicable? No. Because to attract this section, both the faults must be there, neither deducted nor deposited. So if not applicable, I will allow 8 lakh rupees. Please raise your hand if this illustration is clear. In 40A1 and in 40A1A, both the defaults must not be there. Either I failed in deducted or I failed in depositing. In this case, both of the default must be there. Only then you disallow the payment. Otherwise, in spite of a single default, government says no issue, you debit the amount. Because since the payment is made as salary, you will trace this amount or you will get it back this amount from the employee next month or maybe next year. So ultimately the intention of the government is clear, that government is not willing to unnecessarily disallow these genuine expenditures. So to the maximum possible extent, they try to give you the benefit. Just because you failed in deducting or depositing TDS, unnecessarily they are not adding back these expenditures in your P&L account. Now next, same illustration is continuing. Fourth, outside India, Q, a non-resident individual. So whenever payment is made outside India, if it is covered in 40A3, then both the default must be there. So neither deducted, as you can see, so neither deducted nor deposited. That means this section is applicable. If applicable, I cannot deduct any amount. Next situation, outside India, again non-resident. Outside India, resident, non-resident, individual, doesn't matter. Deducted, yes. Deposited, no. But still, this section is not applicable. I can deduct 100% of the amount. Second, say now why I have written ABC, because you must know that technically these three ABC are one. This is one ABC, these are one. I only changed in one point, tax is not deposited but deducted. Another point, tax is not deducted but deposited. Another point, neither tax has been deducted nor deposited. So that is one. That is, all these next three are two ABC. Third, A is interesting. In India, payment must be only to a non-resident. And yes, T, for example, non-resident, is tax deducted? No. Deposited? No. Then this section is applicable and you cannot deduct anything. And if you see situation 4, in India, resident. Now, salary paid to a resident in India is not covered under 40A3. So, tax not deducted, tax not deposited, but still I cannot say that deduction will be 0, because the section itself is not applicable. Because if the payment is in India, then the recipient must be a non-resident. If that person is resident, then it does not matter whether tax has been deducted or deposited. The section itself is not at all applicable, and then if not applicable, there is no question of any disallowance. I will allow 8 lakh rupees. That's it. But another technical point is, whenever I am allowing these expenditures, whether it is 40A1, 40A1A or 40A3, I am allowing these expenditures with one assumption. You can see I'm highlighting here, which is written above in this black background, assuming it is not disallowed under other sections. 40 clause A is only one section which disallow. There are other sections which also disallow the expenditures. So just because my expenditure is allowed as per this section, it does not mean that you will not check other disallowed sections. So first, any expenditure should be valid expenditure. Then you have to check all the sections which disallow some expenditures. So that is why everywhere where I have written, you can see my last column, everywhere where I have written this deduction allowed in the previous year, everywhere where 8 lakh, 8 lakh, 8 lakh, 8 lakh, 8 lakh, 8 lakh is written, carefully see in the bracket, what I have written is that this 8 lakh is allowed as per section 40 clause A. But one more assumption is going on simultaneously. I am assuming that it is not disallowed under other sections. Is the concept clear? If yes, please raise your hands. This 40 clause is technical section. Okay, so let us end the discussion right now, and I'll meet you now tomorrow. And tomorrow we will discuss 40 clause B, and after this I will start 40 capital A also. So goodbye for now, and please start revising the concept of PGBP. That's all from my side. Goodbye.